All right, so I wanted to do a quick breakdown of the trade that I took yesterday and just a whole market review, why I shorted the market. Thought it'd be a good day to do it just because the market's closed today. Right now it's January 9th on Thursday at 11 in the morning. So the market's closed due to a bank holiday that they just recently put in for Jimmy Carter. So um, not a whole lot of movement today, but what I wanted to review was exactly why I took the trade yesterday, and I'll show the clip of the entire trade itself and a little section of me breaking down the trade and exactly what I was looking for in the moment live. So I'm going to pause this section here, and what you'll see now is that sped up clip.
So what I like was how for the first, let's see, first, yeah, 30 minutes of the opening range, we just consolidated back and forth right here, generating a bunch of liquidity. And we left all of these equal highs intact that were resting right below an inefficiency right here and an hourly order block. So what they ended up doing was they took it below these equal lows first to induce breakout sellers. This is how I'm interpreting it. And dig into this inefficiency a little bit more. And then they had a nice low resistance liquidity run higher to take out the opposing equal highs. Now at this point, sell side has been engaged, and now buy side was engaged second into my areas of interest right here. And with my bearish bias and equal lows at the previous day low, that's what I want to target right here. So I like the reaction I'm seeing. That's why I took the turtle soup right here above these highs. Also in confluence with the midnight open, the previous day's settlement. Of course, again, the inefficiency and an hourly order block. So that was my idea for taking the turtle soup above these highs with an overall bearish bias. I want to see price continue to draw lower here. So that was the idea going into the trade. Stop loss is above the London high. And I'll move it if I start to see um, structure change.
So that was the result of the trade right there. Obviously a win and really nice low resistance liquidity run down to sell side there. And what I really want to do is cover how to find or how I find my higher probability turtle soups. And if you don't know what a turtle soup is, it's just an entry mechanism where you're buying sell stops or you're selling buy stops. So really it's buying below old lows or selling above old highs. And obviously, if I'm bearish, what I want to do is sell above old highs where liquidity is. But you don't want to just go and sell above any old high. You need to understand structure, time, um, time and price, right? That's pretty much what the concepts revolve around. So if we're starting off on the daily right here, in my last video, it's been a while since I made a video. It was right around here where I said this big drop was good for longs. I wanted to see movement higher somewhere within this area in the weekly BISI. And we had this daily order block right here, which we haven't taken yet. But we got a nice reaction up here. And then once I saw this rejection, how the bodies are respecting this order block right here, in combination with January um, generally being a bearish month. So as far as seasonal tendency goes, January is typically a bearish month. I trust this as a shift in structure lower a little bit more than I do seeing higher prices. And then this kind of gave me some more confirmation with the rejection of this daily order block right here, followed by this movement lower, taking this low. So it's honestly a little bit tough right now to get a very clear sense of direction on the weekly or the daily for me because now the daily and the weekly aren't really in agreement with each other, and we're seeing a lot of back and forth right here. Um, so really for me, it's just a matter of going down to the lower time frames like the hourly and the 15 minute and the 5 minute, and um, just looking for major liquidity points like previous day's highs, previous day lows, and having an intraday bias like that as opposed to having a higher time frame bias. So my gut tells me lower, but I don't want to rule out the idea of higher prices. So I want to we'll go back just because it'll make it easier for viewing. This is the candle, the daily candle that we're looking at. This is Wednesday's price action. And obviously what we did here was we opened up, and really the main point of liquidity that we took within this day on the higher time frames was this daily low, the previous day low right here. The reason I leaned a little bit more bearish here going into today was because if we look at a weekly profile right here, this is Monday's trading. This is the weekly open. Monday opened up, traded higher into this daily inefficiency, this daily um, bearish fair value gap right here, and had a really nice reaction lower right here. So if you see a candle like this down close candle, in my mind, I think we're more likely to be bearish than bullish if the lower time frames are going to be in agreement with that, right? I'm not going to try and long something like the day after a reaction like this from a higher time frame fair value gap with a seasonal bearish tendency. So that was my idea for on the higher time frame on the daily looking for lower prices. If I go down to the hourly time frame, we start to see some technicals align with that as well. Now I have a clear chart here besides, some of the annotations up here from the previous day because I want to go into this with a clear chart, fresh set of eyes, and just really break it down step by step. If I go up here and I go to, oh, one second. Okay, so if I put on my daily range dividers right here, obviously Monday is the start of the week. What we did was we traded up into that daily SIBI, that daily fair value gap that was bearish right here, and we start to see a breakdown of structure. Okay, so Monday we create this 1 hour SIBI, we create a high above it, we poke above that high, and then have a really nice reaction lower. So at this point, what I'm seeing Monday could potentially create the high of the week. I don't want to have that set in stone because obviously it is NFP week. So we could have a reaction higher or a reaction lower from NFP. That would be really dramatic. So I don't want to have this set in stone just yet. Um, but when I saw the movement below this low right here with the aggression that we had, to me, that was a shift in structure lower. And so now the hourly is telling me bearishness. The daily is telling me potential bearishness as well. And now if we look into Wednesday and start taking a look at what we had overnight, um, it was reasonable for me to go into the day and look for a continuation lower. And I'll go over exactly why that is. So if I take this back even further right here, I really want to start off at the conclusion of yesterday's or Tuesday's trading to really give you insight on what I was looking at for possible scenarios. Now, obviously, like I said, with this drop lower, going below this low is a shift in structure for me. Now, what I wanted to see was just a manipulation higher to have that continuation going lower. So something like this. And honestly, what I saw after Tuesday when I was doing my review at night, I took a fib from this range and I saw that above this hourly swing high right here, this was equilibrium, and then right above equilibrium is this big 1 hour SIBI right here. So I had those areas marked out um, on Tuesday night so that when I woke up in the morning on Wednesday, I would have those areas marked and I would be able to see, is it likely if we go up into those areas, take that liquidity and then go lower? Or a structure from the morning and overnight in London going to tell me something otherwise? And that's actually exactly what happened. So this is really a good lesson for me on being flexible with my analysis because we opened up on midnight and we had that big displacement lower right here. That big displacement lower came from taking these equal highs out right here. And finding out the dealing range for me is really important. And a dealing range is just a a price leg that takes out buy side and takes out sell side. So it takes out two levels of liquidity on opposing sides, and that's your range that you're working with. And so when I find a range that's suggesting lower prices, I can work inside that range, and that's exactly what this did right here. Is this leg down. First, it took out these equal highs, buy side right here, and then it took out this right here, this low. This is your previous day low. So it took out buy side, sell side, and then once you start to see price make a attempted move higher, that's where you can start to place your fib to get out levels because it could just keep going lower from right here, right? And I wouldn't want to place a fib like at this low just yet. I would want to see an attempted move higher first, so now I can understand that we're working within a range. Um, Also, if we're thinking about daily profiles, we know that around 70% of the time that London makes the high of the day. What time did this manipulation leg happen? Happened from 3 a.m. to 5 a.m. and then that move lower above Asia equal highs right here. So in my mind, I'm thinking this is a really good chance that this could be the high of the day right here. In combination with the dealing range, lower prices, and where could we potentially be drawing to, right? We already took the previous day low, so obviously that's a major form of sell side liquidity, but where can we keep on going? If we look at this hourly range right here, it looks like a market maker sell model. Buy side of the curve, sell side of the curve. Closest form of liquidity after taking this previous day low is you look for obvious equal lows. If we take a look on last Friday right here, these look equal, right? These were smooth, and that's exactly what I was looking for right there. That was a best case scenario draw lower for me. That gave me confidence that it wasn't just going to be a dig into the previous day low and then a reversal higher. The fact that these had not been taken yet gave me confidence that we could still see a continuation lower. Okay, so that sets up the context for the trade, and I hope that made sense because I feel like there's a lot of good things right there. But now if we dig down into, let's say, the 15-minute time frame here. Oh, also another thing, if we head back up to the hourly time frame, if we look at our PD arrays from this leg lower, this was an hourly order block right here. And I had that marked out within my trade if you go back and look there. So I want to mark that out here. These three up close candles that were the manipulation leg to take these highs with displacement through and a fair value gap, this makes this a solid, valid order block. So I want to mark that out as 1 hour order block right there. Put it on the left side with the fair value gap. But I'm not going to mark out the SIBI just yet because I want to refine it, go down to a 15-minute time frame. And obviously within this 1 hour order block right here, a 15-minute SIBI appears right here. So now at this point on the 15-minute time frame, I have levels marked down. I know where I want to see price go, being lower. Now I just need to see that retracement higher to manipulate people in order to have that continuation going lower, right? So remember I said with finding my dealing range, I need to see price start to make an attempt to go higher first, and then I can mark out this range right here and find important levels. So now that we're starting to see that this is a swing low created right here, right? And price is obviously making an attempt to go higher. What I did was I took a fib from the high to the low. This is the dealing range. Stops taken right here. Those are buy stops, sell stops taken right here. Okay. Now, if I mark out my OTE levels, that's another confluence right here, right? Because we have an hourly order block, we have a fair value gap. Now, what we also have is OTE levels are also in agreement with that there. So I know that if price is to go back up here and I wanted to take a short somewhere up here, I would be in a nice premium and I wouldn't have to worry about price going above the London high right here because I know that 70% of the time, the high of the day is made in London. We've already had this manipulation higher, and we have equal lows below here. So a lot of things in agreement right there telling me that I shouldn't see price go above here if we're going to continue to be bearish. And this leg lower, failing to take this low right here, these equal lows, what it's done is it's created even more liquidity. So once I saw them fail to take these lows and a move higher, it honestly got me more convinced that we were likely to go lower. So now what I'll do is I'll mark 930 because at this point it's just a matter of waiting for price to get up here, which obviously it eventually does. And now we'll head down to say the 5 minute time frame. So when you see this, you could already potentially be thinking, well, price went up right here into the OTE levels, hit the 15-minute SIBI. Why wouldn't you just take the short there to then hold down for, down here? It's because time and price aren't aligned, right? Time, obviously this is 8:30 right here, but I want to be waiting till New York open, right? That's just my personal rules, and I didn't see as much of a manipulation as I would have wanted to see. Um, But again, my trading starts right around like 9:15, 9:30. I very rarely take trades before the opening bell. So, and I have rules if I want to wait till after the first 30 minutes opening range. And that actually ended up being the case right here. So, one of those rules is to wait for the first 30 minutes to go by when the bell rings at 9:30 is if we have an opening range gap that's smaller than 40 handles. And that's something that I took away from the 2024 mentorship because a lot of the times, if the opening range gap is smaller than 40 handles, it doesn't offer a lot of room, a lot of fluctuation, and what it could call for is really just some poor price action for the first half hour. And that served me really well here because if we go down to the 1 minute time frame, and I just play the first 30 minutes, it's so back and forth right there, right? And I could see a lot of people probably get chopped up right here, and that's where 10 a.m. is. But if we take a look at that opening range gap, and this is probably going to mess up my, okay, actually it wasn't that bad. But if we take a look at the opening range gap right here, this is the previous day settlement price right here. Okay, so on Tuesday when the market closed, that's where the market closed at. And I always want to mark that price out as well as the 9:30 a.m. open right there. Because what that's going to do is it's going to give you your opening range gap. And we can see that from this high down to that open right there, it's 34, 35-ish handles. And so, according to my rules, I need to sit on the sidelines for the first 30 minutes. And what that does is it doesn't give me any FOMO if something does happen because I know I'm just following my rules right there. If we go back to electronic trading hours, this is really where, despite being a really back and forth day, even on like the hourly or 15-minute time frame, you could say it was a seek and destroy type of day, meaning it's just going to keep taking liquidity on both sides and going back into the range. There was a really nice move that um, presented itself after 10 a.m. right here. And that's the trade that I took and what I want to break down right here. So if I take this back before the trade actually originated right here, and look at the first 30 minutes, what we did here is we generated even more liquidity above this previous day low. And you could be thinking, well, we already took this low right here. There's not liquidity there anymore. Well, if you actually go to the real time or regular trading hours right there, and we take a look, let's see. Okay, here we go. And we take a look here, backing that up again. This is the previous day low. This is from Tuesday, right? It was created at 3:37 p.m. So that low right there, according to real-time trading hours, it still hasn't been hit yet. Overnight it did during electronic trading hours, but that's why I like to toggle through both of them because it still gives me um, good insight as to what is still resting liquidity. And right here, all we've done in the first 30 minutes is generate tons of more liquidity. That's equal lows, pretty much like a triple bottom, resting right above the previous day low right there. So this was still a huge target for me of where I wanted to see price go to. And then we need to start breaking down structure and give the narrative of it, of exactly why it should go down there, right? So within the first 30 minutes, obviously, if I look to the left right here, and this is what I mentioned, we have this big fair value gap right here with this low. And this low had equal lows during, and it was created during the opening range, right? So we came up, came back down, created equal lows right there, went back up. Now we've created essentially a four top right here. So there's tons of liquidity above and below the marketplace at this point. And one thing that I've said time and time again on this YouTube channel and what I like to look for is if I'm bearish and I see something like this, what I want to do or what I want to see is the market take the liquidity of the direction that I want it to go first. So meaning if I want to see it go lower, I want to see it take this sell side first because what that's going to do is it's going to trip up people who are selling on a breakout. And breakout selling happens a lot whenever we're in consolidation like this, especially during the opening range. There's traders out there who want to trade whichever side it takes first if it's creating a range like this. So at this point, sell side had been taken first, and we have all of this resting liquidity up above here. Now, it would be really hard to believe that they would just send it lower while leaving all of this liquidity up here, right? And at this point, I just have to sit and wait and trust that it's going to do that. And obviously, what it ended up doing is it was trading higher, 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 and it took that. All right. So at this point, this is when I entered my short, and I trusted that this was a run on stops rather than it was just going to take these highs and keep on going. If I was bullish, I would want it to see it do that because it took these lows right here into this fair value gap and ran. If I was bullish on like the hourly, the daily, the 15-minute, this is a pattern I would like to see. And I probably would have taken this long right here. Well, I would like to think so, right? But if it took these lows and ran higher, but since I'm bearish, what I wanted to do is the very opposite. I wanted to take these highs and go lower, and I'm more confident that it would be a nice low resistance liquidity run lower because it already took these stops down here. So what else do we have? Again, on the higher time frame, we had that hourly SIBI, or excuse me, that hourly order block right here. We have that 15-minute SIBI right here, and we had OTE levels. And the London high are these highs right here, and I already gave the breakdown on why I wouldn't want to see price go above that right there is because I believe that London made the high of the day right there on its manipulation run higher. So at this point, this is one of those instances where I'm confident selling into people trying to buy on a breakout right here. And that's why I went short right around here. I put my stops above the London high or right at it, and my take profit was right at the previous day low because we had equal lows generated at that previous day low. So it was a little bit above a 2 to 1, and it was a nice about 110, 113 point run lower. So it's an area, or I shouldn't say an area. It's a sequence where pyramiding is it's a lot more obvious than in other areas for me because since I was so bearish and I saw the run on stops right here, I sold into this, but I didn't pyramid. But looking back at it, I see how I could have easily pyramided right here because we had this inversion fair value gap, which is, giving me further confirmation that lower prices are in store. So I could have sold on either a close below that, like right here, or I could have put another limit order right here where it went up, tapped that, and continued lower. So those are a couple pyramid options. Another really nice one right here is this order block, and you see me mark it out during the live trade. Is these two consecutive up close candles right here were the manipulation leg into all of these highs into this imbalance right here. After we closed below that order block, we went up, tapped it a couple more times, and then had a really nice move lower right here. And these are the types of runs that you see whenever opposing liquidity on the opposite side gets taken first. So sell side first, buy side second into this area right here for then the continuation lower. Took my profit at the previous day low below these equal lows, and I called it a day right there. Now this next part is going to be kind of like a side note. Um, for people who trade ICT or follow them or anything like that, they probably know that there's been a 2025 mentorship in place now. And if you look at his most recent episode, obviously I have my model and I'm going to trade my model, but um, if the guy's going to put out more videos or more mentorship, obviously I'm going to watch just because um, I just want to continue learning, and if there's some things that I could pick up, then of course I'll add, or it's just nice to know some of those things. But I'm confident that with the model that I have, that learning more, it's not going to mess me up or anything like that, or give me analysis paralysis. It's just if I see fit of kind of contorting things into my analysis, then why not? But one thing I wanted to point out, which I thought was really cool, was in the most recent lecture, the midnight opening range, that is from 12 to 12:30 right here. You can mark out. It's very similar to the first 30 minutes of the market open, so 9:30 to 10 a.m. And obviously, I don't know. I only know as far as what was shared within the video, but what he mentioned was we can mark out uh, any PD arrays, for instance, like the first presented fair value gap. If we look right here, from uh, midnight open right here up until this point right here, this is the first presented fair value gap of the day. And so if I extend that right, and I'll make it purple right here, and you can also mark out the highs and lows, and I'll make those thick right here. So the high and low of the opening range right here, for from midnight, and then the midnight opening price right here. And then this is the first presented fair value gap of this range. Now, if we scroll right, and another side note, there's also a bunch of different projections you can do, but I'll save that time right here. if we scroll right, what we can see was after taking out all of these highs right here in this turtle soup play, look how it went right into that first presented fair value gap of the day, bodies respecting it, and then continued lower right there. I thought that was something that's really cool to see. Um, and it's just amazing, what the concepts can do and the precision that they offer. So that's just a little side note right there and something I wanted to include. But yeah, I hope that breakdown was helpful. Exactly why I took the trade. If you have any questions or comments, you can either DM me on Instagram. I'll put up the username right here, or you can just leave a comment down below, and I'll definitely get back to you. But yeah, again, hope that made sense, and good luck to you trading.